And to decode the impact and to dive into alternative possibilities, just to lighten the kind of blow, let's bring in Vibha Kagzy. She is CEO at reachiv.com. Also joining us is Nisreen Mamaji, CEO at Moneyworks Financial Services. Great to have you with us this evening, ladies. Vibha, let me come to you first. Now that Indian students studying abroad have this big problem on their hands with the declining rupee, how do you suggest they mitigate the blow? Should they work alongside their courses and look at an income flow there, or look for cheaper accommodation? Should they stagger payments? What are the ways in which they can keep their dream intact without hurting their bank balances too much?
I think the dream is very much alive and it will stay intact. So my advice to anyone who's already in the US is stay focused on your academics. Work visas have become much more liberal in the United States, and companies are hiring much more generously. In fact, post-pandemic, we've seen way higher recruitments. The average salaries have gone up. There is an inflation in the salaries that the companies are willing to offer to attract really talented labor to come over to them. As far as I'm concerned, the market is just absolutely ripe for them. And obviously, when you repatriate funds back into India at those higher currency rates, you're in for the joyride. So I would suggest stay put and nothing to panic about, because if you're in the right job market, fortunately, the job market and the visa market have stayed very much alive and are following the same trend. So that puts them in a good position and hedges them safely.
You know, this sounds music to many ears right now, because that positive word needs to come out and people need to keep the faith. Nisreen, are you as positive from a financial management standpoint, since education loans are becoming more expensive? What are the ways that you're suggesting to keep the financial damage in check? Should they be investing perhaps in government-backed securities in the US, staggering loan repayments, or take bridge loans? How do you kind of go about it?
So it's really a very tough time, a very challenging time for parents whose children are poised to go in 2022, because possibly the decision for them to have, go for international education would have been made about, 4 or 5 years earlier. And even, like an education planning, a financial plan related to your child's education is in fact done much earlier. So even after factoring inflation, the rupee depreciation has very negatively impacted the education plans which are in place. Now, there are a couple of choices that the children who are going for the first time will possibly have. So one is that, they can work part-time, because most of the education, the visa rules do allow for part-time employment for about 40 hours or 20 hours a week, between 20 to 40, depending on the program that you've taken. For the new students, it's really very difficult, because, they will perforce live on campus, which is slightly more expensive than taking a, accommodation outside the campus. And they are also not accustomed to the, if they're going as undergrads, they're going at 18. So they really don't know the lifestyle, and they might be not willing to take up a job immediately on campus. So for that purpose, I think the parents have a few options. For the example that you stated earlier, where the fees were about $40,000 and the accommodation, etc., was about $9,000, I think the parents can look at either topping up the existing loan, either from the same banker or another banker or an NBFC, to the extent that you are still eligible, because every loan will have its corresponding collateral. So if there is still some kind of eligibility left, you haven't reached your maximum eligibility, you can go for a top-up loan, or you can go for a bridge loan, as I said earlier, either from the same bank, another bank, or from an NBFC. The scholarship route is also still there, but for a student who's planning to go in fall this year, that option may not give you enough time to plan. So you can either defer by 1 year, where you still have the opportunity to apply to trusts, corporates, or any other option for a scholarship that you might have domestically and internationally, after having given your financial background. And I think these are the few options. Or you can also go in for a friendly loan from friends and relatives, whereby they will not charge you the interest that is applicable with the banks. Or you can defer the payment, either from grandparents or from relatives and friends who are willing to support you for the difference, which is working out to about 3 lakh rupees right now. For what we discussed earlier, it's 250,000 rupees for the tuition fees and about 56,000 rupees for the accommodation, etc. Also, we have to factor in the fact that the child might want to come back, because if they're going for the first time, Sometimes they come back every 4 months, after every semester. And if they're a little brave and they can manage to stay on for another year, then it would be a transportation cost for next year.
Yes.
Travel expenses also very high this year because of the fuel, impact. So these are the few ways.
Several places where you can save and perhaps realign to our realities. Vibha, talking about the options right now, because like we said, sometimes you need to go back to the drawing board, keeping current scenarios in mind. It isn't like we've seen education abroad become cheaper in the recent past, but new alternatives have been showing up outside the US, Canada, Australia, UK circuit. So which are the other education hubs that are promising from a futuristic perspective in terms of their credibility to deliver good jobs after imparting that good education? Is this the time, you think, to consider some of those alternatives, and are they restricted to only certain educational streams over others?
So the other education hubs emerging are, of course, Germany is great. They offer multilingual education. They have courses taught in English as well as in German parallelly. Same for Spain. Germany, of course, very well known for technology, undergraduate education technology, way cheaper than anything in the US, Canada, or in Singapore. So that's a favorable option for us. But obviously, keep in mind that the starting salaries that American companies offer, be it in consulting, finance, of course, in technology, are unparalleled. You can take any study abroad destination, but what the US offers in terms of starting salaries for undergraduates is unparalleled. So my word of advice is think of this as a long-term investment. Of course, it is a hiccup. Of course, 3 lakh rupees is a significant amount of money when seen from a sort of myopic perspective. But if you think about your investment from a 5-year, 10-year, definitely 15-year horizon, 3 to 5 lakh rupees when you work in a company that offers you a starting salary of $80,000 to $120,000 for an undergraduate, it's, as far as I'm concerned, it's a speck in the woods. It's something that you just need to get over. And I don't see the trend reversing either, right? I don't think from 80 we're going to go back to 65. So, delaying payments or planning payments for the future, I don't know how helpful that's going to be, because I don't see a massive reversal in this trend. We've all been seeing it for the last 25 years. It's an upward trajectory. So anticipating a reversal in the trend might be a fallacy as far as I'm concerned.
Right. So this is our reality, and we'll just have to accept it as such, and then perhaps redraw our plans basis our current situation, where we stand financially, and then perhaps taking it from there. But whether or not we can bank on the job market remaining constant, even though it has remained rather resilient, that too remains to be seen, because we are talking about the onset of a slowdown, a global slowdown, and whether the job market is going to stay as resilient in times to come, that too needs to be factored in. But thanks very much, Vibha and Nisreen, for joining us with your perspective on this. Of course, it's a subject that will require deeper dives, but we'll do that in the future.